Hello, good morning. And today is Friday the 14th of July 2023. My charts look a little bit different. The coloring is a little different. That's because I reset the template. I had too much drawings. So before we get started, let me just go ahead and give the link off. Give the link to, sorry if you heard that echo. Okay. Let's go ahead and just zoom in a little bit on the charts now. Okay. As you can see, New York session has started. I added a session indicator. It's not really, doesn't make that much of a difference. I just wanted, it's better for me when I'm back testing that I see the time. But we are bullish today, obviously. If you couldn't see the arrow right here, we are bullish on the day, which I will just remove now. And alright, so let's see what happens today. So I'll wait for a few more people to hop in, but I'm going to explain. We have the lines here drawn. This is from the highest and lowest of the day. So since we're bullish on the day, we want price to be down here, which I also forgot. I need to do the last 5 minute. The last 5 minute is this right here. So for a regular trade, we need price to drop down here. And if we go on, just let me go on Forex Factory really quick. Today we don't really have news until 10 a.m. So pretty much a slow morning. We'll see how it plays out. But essentially we want our trade to be down here. And for the regular gold drilling strategy, we just want it to be below the 50% line. Now, if it breaks up here, we're just gonna cancel out the idea that we're gonna be bullish, because if it came down, it probably means it's gonna keep going down. Okay? So keep that in mind. If it goes above the high of the day, we're not gonna be bullish anymore if it comes down. On the daily chart, let's see what the daily chart is doing. The daily chart is basically a dodgy. There's nothing going on with it. So if we could get our trade down here, and then it flips back bullish and continues to these highs, because it has a very strong chance that it could be bullish and go all the way. Maybe, let's say it's gonna take out this level today, right? Because it's Friday, so it's gonna have a continuation, right? It could possibly take out this high, or even this high here. I'll just draw both of them and continue, or it could come back. So hopefully we get a trade before all that happens, but it has to go all the way. As you can see, it has to go all the way up here and here. I'm gonna put these as different colors so we know that these are highs on the daily. We'll put them orange, right? And that way we know that the green one down here is the 5 minute. This is the 5 minute low it has to break before we take a trade based on the gold. It's been a really quiet week. Maybe not so, what do you call it? Not so exciting. Alright. So, yesterday, I wanted to talk about yesterday while we wait. We have a long way, right? Like, price has not come down here. We're pretty much waiting. I'm gonna talk about yesterday how the gold drilling would have went. So yesterday we knew we were bearish, right? Bearish for the day, and we saw price come here. This was news. If you had entered a sell trade right here on this confirmed setup, because I think the high it had to break was like this high here, right? The 5-minute high, and it broke it right here, closed above it, gave a signal here. So this was yesterday, right? And then the news would have, because your stop loss was up here, would have taken you out before it went to hit TP. And then we ended up getting another trade somewhere where it hit TP was right here. So it hit TP down here, right? We took another trade here. Now, for the gold drilling, right? You would have looked for when it retraced up to the 50%, which was like around the middle here. You would have looked for a imbalance, fair value gap, whatever you want to call it, inefficiency, and there was one here, right? And what I noticed yesterday is I said that this would have been a win, but actually no, this would not have been a win, and let me show you. So I'll unextend it. This right here, this one was a loss because your stop loss isn't going to be up here, okay? Your stop loss isn't going to be up here. It's going to be the high of the candle that has the gap plus 1 pip, right? So this would have been a loss, right? If you took it based off the gold drilling. But the thing is, let me increase it. So it's 1, so it's 7-1, so we wanted like 8-1, 8-2 around there. So we'll just put it like that, right? And your take profit is 4R. Now, this one here would have lost, and I'll show you why. Hold on, sorry. Kind of messed that up. But so it lost, and yesterday when I was explaining it, I was telling you guys that you take 4R and you're only risking 0.5%, right? So let's assume you lost 0.5% here, okay? And actually, let's assume you traded before 820. Now, I like taking trades after 820. You know why? Is because the gold commodity exchange, well, the commodity exchange opens at 820 for the US, right? Which is the second most traded time when gold is traded. So this imbalance, fair value gap, whatever, was not really a good trade because obviously it is at 818. And I like to trade after 820. But let's assume you took both of these. Worst case scenario, right? Like, you're itching for a trade, so you took this one and this one, right? And your stop loss, we'll say, is also 1 pip, and it was a 4R trade. So let's say you're down because you were greedy, you took this one, but because you lost this, you got impulsive, right? You got impulsive, and then you took this trade right here because there is no other. You could say this is a imbalance fair value gap, but this is below the 50% of the whole daily range, right? So you're not taking this one for sure. You got impulsive, took this one, you lost it. You should have waited until 820, but you accepted the loss. But then this one was impulsive because you're down for the day and you wanted to make your money back, okay? You lose that one. So now you're down 0.5, 0.5. Well, there's another one right here that you would still take because it's before 10 a.m. Okay? Anything before 10 a.m., if it's confirmed, if it's valid, And if you win, then you stop. But if you lose, you go until 10 a.m. if you see anything good. Or unless, remember the other one would be if it broke the high of the day, which was up here at the time, right? Anyway, so continuing back to this, you got in a trade right here. And how would you have entered this? Would you have entered on the top or the middle, right? Because our entry is the middle, so I should be actually doing these correctly, just so you know. Okay, so let's say you entered in the middle, or if it's too small, like I said, if the imbalance or fair value gap, whatever you want to call it, is too small, you could enter on the top end of it. If price hits the top end, your stop loss is going to be that candle that made the imbalance, which is the middle candle, right? So the middle candle plus 1 pip, and your take profit is 4R, which is right here. And as you could have seen right here, it would have hit your TP right there. It would have tagged you in. Well, actually, even if we say, okay, this one didn't tag you in because it looks like if you had spreads on this, you didn't enter this trade, right? If you look at the wicks right there, unless you put like your entry 50%, in which case you also probably didn't hit take profit right here. Okay, so let's assume you didn't hit take profit here and you used the top side because you didn't get entered, right? It never hit stop loss, right? And you kept going, and I believe that one would have hit your 4R, which is like whatever down here. And even if you took it at 50% line, right? Let's say you took it at 50% line right there. You still hit your 4R. It went down almost 4.5, but 4R was right here. So even if it wasn't exactly 50%, a little less, you would have still hit 4R, more than 4R, but regardless. So you lost 0.5 off a trade you shouldn't have taken because it's before 8:20. And then you lost right here 0.5. So now you were down 1% on your challenge, right? And then you win 0.5 times 4, which is 2%. So you lost 1%, but you made 2%. So you're positive on this day. You are positive 1%. Okay? And that's how you would basically play this, the gold drilling. So it takes advantage of risking less, because when you lose 0.5, you're probably not going to be as stressed out as if you're losing 1%, right? Anyway, let's just check what today is doing so far. Okay, so I don't like this because maybe you have a question. Is this an entry for gold drilling right here? I'll answer that in a little bit, but this imbalance seems fair enough to go off the 50%, right? Because it's not too small, so you don't need to go off the bottom side. So 50%, your stop loss is the low of the imbalance, right? The middle candle plus 1 pip, right? So 1 pip would be 39 instead of 29. Okay. Okay, so it's down here. And I might make this a little, let me make this a little darker because I do believe it is. Okay. There we go. Okay. Now, you might ask yourself, like, is this a good entry? So you have your 4R right here. It's below the 50% line, right? Which is this blue dotted line, right? The entry is below this blue dotted line. So technically, since we are on a bullish bias today, and let me go ahead and just point the arrow, right? We're on a bullish bias. So essentially, we don't wait for the gold drilling strategy. We don't need a 5-minute break. Okay, we don't need this right here. You see this? We don't need a 5-minute break. We could take the trade just off the fair value gap, imbalance, whatever it is, halfway. We risk 0.5. This would have made 2% today. But no, this is not valid. Okay. The reason why this is not valid is because look where the fair value gap started. It was the last 1 minute candle before 8 a.m. We want a fair value gap at after 8 a.m. And even though the trade signal would have happened at 8:19, we're not taking this because it wasn't after 8 a.m. Furthermore, it wasn't even 8:20 when it gave the signal, right? So this is a no. But it is nice to see that it would have worked out. So even if you were impulsive, just like yesterday when we saw that trade before 8:20, if you were impulsive on this day as well and got in a trade before 8:20, obviously today it would have worked out. Yesterday it didn't work out, today it would have worked out. Is it worth the risk? That's up to you, because technically guys, it is a 4-hour trade, right? So because you lost 0.5 yesterday trading before 8:20 does not mean you don't have to take it, because it gives you 2% total if you do win. And today would have made back for that loss that you lost yesterday before 8:20. But personally, I wouldn't take it, okay? Reason I wouldn't take it is because obviously the imbalance came in before even 8 a.m. So now we just wait. And I know some of you guys are going to ask me later if this works on Forex or whatever. I'd say you could try it on major pairs. But other than that, I don't think you should. I don't trade major pairs, right? Maybe you could try pound USD and euro USD and all that, but other than that, that's all. Like, you don't really need them. Gold is all you really need. Alright, so hopefully I'm making sense with what I'm showing you guys. The idea is I want to at least incorporate some kind of training every day, so when we don't have any trades going on, we're still learning, and it makes it worth it for you to sit through, you know, the 20 minutes you'll have to sit through or whatever it is. So right now we're waiting for price to come down here, break this 5 minute, this was the last 5 minute swing before 8, which technically it had another swing here that was broken right before 8. So this could have been the sweep we were looking for. It happened 5 minutes earlier, but essentially we wanted to break here. Now, if it breaks the high here, guys, here's what I'll probably look for, right? I will look for, if it breaks and closes up here, I will look for this. So it comes up, breaks it, comes down and closes below here. Then I'm gonna look for an imbalance entry to go down. Okay? Let's go back to the 1 minute, but okay. So far everything is okay, it's fine. If you have any questions about the gold drilling and the strategy for the morning, you could let me know. I'll try my best to explain to you. Because it doesn't look like we're getting anything yet. We still need price to come down below the 50% line, right? We need it to come down before the 50% line, and we need it to be actually down here if we want to take it based off the gold mining strategy. But the gold drilling, we need it down here. And this area right here would be the best area to get what we're looking for. And let's review the previous day. So the previous day was CPI, right? So while we're waiting, we could review Wednesday, right? So keep in mind, yesterday we won 1%, okay? So let's go to Monday. We'll start Monday, okay? Keep in mind, Thursday is a win of 1%, right? So on Monday, I could already tell we're bullish for the day, right? So we're looking for a bullish. The low before 7 a.m. or 8 a.m. was this right here. So since we were bullish, right? Price did not give us a signal to go up after 8 a.m. until right here. So this could have been a little risky. It has an imbalance right there, right? You could all see that. If I zoom in, so this is Monday, right? Monday, it had the imbalance right here. And if you put that halfway mark, because it's small, I wouldn't even go to the halfway mark. I could just go to the bottom part of it. But let's just say we put it halfway mark, alright? Stop loss goes 1 pip below the imbalance candle, which is this one right here. 1 pip would be 0.35. So right there. And take profit is 4R, which would be... So in some cases you may get more than 4R, because I'm pretty sure this candle moved up really fast. This is a 1 minute chart, right? So if you were just watching for price to hit 4R instead of putting your take profit up here, obviously this candle went way above it, and you could have probably, so I wouldn't suggest putting a TP sometimes. Just like have a mental stop where you're gonna stop it out, right? Unless you have to actually go somewhere or you have to do something else, don't just put your TP. Put your stop loss and leave your TP and watch it go up to 4R. Because what could happen is when it hits 4R, or not 4R, but like around here, it may just spike up and you could have gotten maybe a 5, 6. It went to a total of 6.8, but I'm pretty sure you could have gotten more than a 4R. Even if it's 4.5, it's still worth it, right? Either way, so Monday was a success. A little bit risky because it broke the low and closed below the low of the day before 8 a.m. So it was still pretty risky, but worked out just fine. Let's see Tuesday. So you made 4R, which is 2%. On Tuesday, I can tell that we were bearish on Tuesday, right? So on Tuesday, we're bearish, and let's take a look at what we see. So after 8, you have this imbalance right here. This is before 8:20 though. Okay, so this is before 8:20. Do you take this? Maybe you took it, right? I'm just gonna always do worst case scenario because I know some people are gonna take it anyway. Even if I say don't do it, they're still gonna do it, right? So 5.8. So put stop loss there. Take profit is down here. You got stopped out, right? So you lost 0.5%. So you're up 1.5% for the week because you lost that. And where do you see another imbalance? There's no imbalances here until this right here, right? And I drag it out. And if we do 50% of this right here, and we put stop loss on the candle that caused the imbalance, and 1 pip above, which would be 6.2. Alright, and we do a 4R. It literally got hit on this candle right here. So in 2 bars you had hit take profit. So you were up 1.5% for the week plus 2, so now you're up 3.5, right? And then we just did Wednesday. CPI, did we get a trade on CPI day? So on Wednesday you had the high of the day was right here, right? Price broke above it and created this right here. So when you lose one trade above, you just stop, right? You don't want to take any more. So assuming you lost this trade here, because I could already tell it did not hit 4R, right? So yeah. So you lost that trade, so you're up 3% for the week. And then yesterday you had this loss right here, and then this loss, and then this one. So you're up 4% for the week. And today is Friday, and we're just waiting now. So hopefully it's making sense. And good morning RTG. Hope you're having a good morning. Now, tell me if you guys like that. Do you prefer that entry, or do you prefer the current entry we use with engulfing? Because that's what's going to make the difference in your trading, knowing what's easier for you to understand. Like, are you guys able to understand this entry better? Or would you rather, if we're bearish here, right? Obviously Wednesday is not a good example because we had Wednesday, we should have won Wednesday, and I'm going to be honest with you guys. On Wednesday CPI, I do believe I took the signal right here, and that's the one we lost, right? Or did I take it up here? I don't even remember. I just remember we lost the trade on CPI day. But I do believe it was this one. But this one here. This was the valid trade as well. I've looked it over. This was a valid trade because the wick was not bigger than the body. It was just about even. So this was an entry we should have taken using previous high as stop loss, which would be either here or here, right? If you use here, I'm not sure if you hit target 2R, but yeah, I don't think you hit 2R there, but if you use this one here, obviously you hit 2R. However, I lost this trade, which is okay. Let me go ahead and... Okay, so you lost that. On the previous day, I do believe on this day here, with the current entry we use, we did not have a trade on this day because the 5-minute high was somewhere like, I think it was up here, this right here. So we didn't have a trade on Tuesday. And on Monday, I believe, Monday we might have had a trade, or did we not have a trade? Maybe I'm wrong. Maybe it was Monday we didn't have a trade, and then Tuesday we... I don't remember if we had a trade on Tuesday either. But I mean, I could look at it, but I think we need to watch the markets now because I see that it's getting interesting. Here we go. Yeah, we need to watch the markets here. Enough back testing. Okay, so remember there's two types of entries. Yeah, I think you should stick, if you're having success with the engulfing entry, just stick to that then. Because yes, it's gonna have losers, but every type of entry is gonna have its losers, right? This week it may lose 2-3 times in a row, but then next week it wins all 5. We've seen weeks in June last month where it won every week for multiple weeks. It just straight won weeks, right? This week it's been rough. Maybe a few differences could have made it better, but that doesn't mean next week it's gonna be a loss, you know? Okay, so one thing I don't like about this, guys, we see this really often. Price shoots up, then has a waterfall. I keep telling you guys about this, right? Where it's gonna have a waterfall, and then it's gonna have one pullback, two pullback. The second pullback is a little bit higher, and then kind of goes for a third. So we may not get to see a trade early unless it has to break and close below this area. Let me go ahead and just remove this box. Keep my charts as clean as possible. This purple background that you see is the New York session. So I have a session indicator that has a background, that has a different background from 8 a.m. to 10 a.m. Okay, that's the only difference, and I use it mainly for when I'm back testing, so I don't have to like manually look where 8 a.m. is. Yeah, RTG, that is true as well. Yeah, I think for your live, at least if you're funded already, stick to the engulfing candles. But if you have a test, like let's say you have another account, you could definitely get like a 10K account or something and try the gold drilling. So we're still waiting for it to break this line and close below it. And yeah, I'm definitely not saying like swap the strategies around and stop using engulfing. Remember, I did a test since May, early even before May. From like mid-April we were looking at gold, right? And I was looking into it because I remember specifically letting some of you guys know that I had a gold strategy, right? That I didn't share with anybody. I was just doing it myself. And then in May, I actually started recording the results every time I took a trade, lost it, won it, whatever. And since May till now, it still has a 78% win rate. Yes, it lost a couple times. I think it lost once this week, and last week it lost once or twice. I don't remember, or it was the previous week it lost twice. I don't really remember, but still a 77% win rate within over 50 trades. With a 2R is still like, it's nothing to start doubting just after a slow week, UJ, our night session strategy, it had a rough 2 weeks, I think, before it started picking up. And now, in the past 3 weeks, UJ has won almost every day. It had like maybe 2 or 3 losses, but it's won about 7, 8 times, whatever. So I think it's worth keeping an eye on UJ as well. But sometimes the strategies will have a stagnant period where it may not provide the best optimal results, but that does not necessarily mean that you should stop looking at it. So gold itself, I'm not going to stop looking at it. Well, the gold engulfing entry, but I'm also going to be looking at the entry with the imbalances, right? So let's assume this here creates an imbalance, right? We'll take a look at how this one does. And remember, since it's a 0.5%, I'm not saying take this, right? I just want you to watch it and get familiar with the... So, assuming you're going to take maybe 4 trades maximum. If this trade loses, you're going to take 4 trades maximum to see if you could win one. So 7-4 is the stop loss. Well, let's see if it even finishes as a... Okay, it did finish now. Okay, so let's say you're triggered in right now. If this is the first loss, then you still take the next gap it gives you. Okay? Next, whatever you want to call it. Imbalance, fair value gap. So your entry is 50% of the imbalance right here. So, and there's no moving to break even, none of that. Okay? You're just taking 4R specifically. If it wins, it wins. If it loses, it loses. I'm going to see how many times today it will win or lose based off of what I've just showed you guys. And the rules have been met for this. Meanwhile, we're still waiting for gold to come down here for our regular trade, right? We know it's in a heavy downtrend. So for our regular trade, I'm still waiting. We're not doing anything until it closes below this area here. Just in case anybody... Just in case anybody joins late and sees this, this is not a trade that we've taken. That's just, I'm looking to see how many of these entries it will take for it to win today. Alright, still has to come down here. I think it's about to start coming down here. It may have one more pullback after this big. If it pushes below here, it may give one more drive down before it goes up a little bit. I do think it's going to reach in this area here, this big range. Okay, so if you had taken a gold drilling entry right there, that would have stopped you out for sure. This candle right here. So we'll keep it like this and we'll keep monitoring how it would react. As far as our regular trade, it's getting close to an entry area. We need it to break and close below here, so it can't just break it, it has to close below this area. Let me go ahead and put some arrows over here. So we wanted like something like this. And we want our trade to be somewhere in here. Let's take a look at what the 5 minute. The 5 minutes is an engulfing right now, and it's about to close in 2 minutes. This is pretty much a good sign that it may continue going higher. 15 minute is about to close in a little bit. Same with the 30 minutes. Created a big wick. The hourly candle is pretty much trying to flip back positive. It has about, it's like $2 away from where we should be looking for entries. Also, to not confuse anybody, I'm going to remove this. Let me go ahead and remove some of these drawings. This is just something we're watching. The real move, I think, when gold comes down here, it may go down even further than this. Maybe like test these lows, perhaps. Hopefully we'll get an entry. We have about 30 minutes until New York Open. I'll probably be still looking at charts. As long as we stay around here and we haven't like reversed all the way up here, I'll keep watching them. See, this range it's collected here is lower than this range here, so it's definitely still bearish. I don't think it's just gonna randomly shoot up. It could, but I don't think that's what it's gonna do. Okay, so here we're getting closer. We would like a close below here. This is good. 20 seconds. Now, once it closes below here, all we need is an engulfing, and we're good. Alright, so it's closed. Now, if we get an engulfing, it doesn't matter if it's this one, whatever the next engulfing is that's bullish, we're going to take this trade to go higher for a 2-hour trade. So I'm going to go ahead and delete this, clear more space to our chart. Slowly inching there, slowly inching. Okay, so now what I would like it to do is create an engulfing in this area. Okay, we don't want it to break, maybe we don't want it to close below these areas here and then close below here. If it closes below the very low of the day, we're canceling today. If it closes below this green line, no more trading, because it's already gone up enough, right, to where that if this is going down, it could continue dropping for the rest of the day. So we want an engulfing to happen before we break those lows, and we may be getting it here. Hopefully, it is a possibility. If it was to happen, this would be a, let's see, 56 to 55, about $1 stop loss. Doesn't look like this will be the trade yet. Yeah, it's reversing. Okay. It's okay. There's no engulfing yet. Slowly waiting. Try to take all your emotions out of the trading, right? The trade is either going to happen, it's going to happen. Once it happens, it's not up to you or me to control if it wins or loses, okay? All we could do is take the trade correctly and just wait. That's all. Maybe in like 20 minutes, if a trade hasn't happened, we close off for the day. But I'd like to see this close a decent down candle, down close, and then the next one gives us a good engulfing, and then use the lows here as stop loss. That would be really good if we could get this to be engulfing right here. It would be really nice. This is so you had one wave down, two waves down, so this is the third wave down, so it could eventually come down here. Yeah, this is the third, because you have this first drop, second drop, and now it's making a third drop, which this is also a good move, because if the next candle's engulfing, I have more faith that that setup is gonna work. So let's see. All we could really do is take the trade with the correct setup, right? It's almost setting up. We've reached the area where we needed it to reach, right? After a while, it broke and closed below here, right? I don't like this that it moved in our direction before reaching down here. But as long as it doesn't break and close below here by a lot, it could come down maybe a little bit, right? To test the lows and then reverse. But if it goes too far down, like let's say if it goes like down here or something, we're not taking any more trades. Like that's it. It's probably gonna be a downtrend, heavy downtrend today, if it goes down here. So we'll say maybe like 52,500. So I'm gonna draw a line, and we'll say if it goes down past this level, right? No more trades. So it has to be, the trade setup has to happen in this box here. Okay? And the only thing we're looking for now is a bullish engulfing. That's it. Every other rule has been met. So we just now need it to go higher. Hopefully I'm making sense to you guys and you're able to understand. Okay. Keep in mind you have to be ready here, right? Because any of these candles could be a signal, right? It could be a signal anytime, at any point now. Keep measuring the tools. Okay, so this is clearly not an engulfing. So any engulfing that happens, we're going to take them. And our risk reward is going to be 2R. Alright. So close. Okay, could we get a trade here? It's possible we get a setup here. Now, our stop loss, if this does provide this trade, would be pretty much 1.89. Take profit would be a 2R, which would reach up here. Okay. I don't know about the stop loss. It's a little bit big, to be honest. If this is the engulfing right here, let's see. We have 10 seconds to be sure. Yeah, it is the engulfing. Alright, so I'm in the trade now. The stop loss is the low right here. And take profit will be 2R. Alright, we did everything the rules said. So, regardless of how it plays out, we followed the rules. And I think that's what you should pretty much be celebrating, or you should be happy about, is when you take the trade exactly how it's supposed to be taken. So this stop loss is a 2R, as a $2 stop loss. Alright. What the hell? Oh, okay. Alright. So far, so good. Don't panic close, don't panic move your stop loss to break even. Just let it play out how it's supposed to play out. Okay? Win or lose, it doesn't matter. You took the trade how it's supposed to be taken, and that's what matters. It's reacting off this level right here. There's like an imbalance right there, so price may come down and then continue going higher, or it may come down and break the low. What's the take profit of this? It is 1960.86. Heavy sell-off right here. It could retest down here. Some support right here. There's also support right down here near our stop loss. It could retest. It's also testing this right here, this imbalance, which would also be the second trade basically of the 4-hour trade. So let me just zoom in and assume you took, oh, not sure why that happened, but okay, so it tested this imbalance right here. Your stop loss is a pip below that, so this one here was kind of small, so if you took it off the low, you put it a pip below the low, which is 4.3, so the stop loss is like 5.3. It looks like it would have almost came down to hit your stop, but because you use a pip below the right here below this, it wouldn't have hit you, and 4R would be up here. So let's see if it does come up and hit 4R on this trade as well. Now, you may see to the left here, there was imbalances here. This one here, this one here. Why wouldn't we take those or count those? Because as they were happening, I was looking at this imbalance. Look at, they all filled in with this imbalance right here. So technically it's like the same trade. So that's why this would be the second trade and not these two here. Hopefully that makes sense. And we'll see how this one plays out. So technically you would have lost one already, and now you're on a second to see if you're gonna lose or win this one. Alright guys, while it does this, I will be right back. Let me go ahead and make sure I have my stop losses input just in case it goes further down when I'm not around. Okay, all my stop losses are good. And what's the take profit of this trade? 2R is at 196086 or 1960.86. Okay, so my take profit and stop losses are already set. Alright guys, give me 1 second. I'll be right back. Okay, be right back. Alright, I'm back. As we see right now, looks like price is dropping again. And it could go ahead and fill the wick and stop us out. Overall, there's nothing really we could do about this. If it comes down and tags our stop loss, it's okay because we did everything we could. Okay? We did everything perfectly. We waited for the right moment, the first engulfing candle after price broke and closed below the 5-minute low, which was this one here, right? So we did everything correctly. There was another engulfing here which showed good momentum to the upside. So I think overall, if this stops us out, let me go ahead and delete this. Overall, if we get stopped out, guys, it's whatever. You know, it's just a bad day, a bad week, whatever. Because I think this will be the first week I'm actually negative because I didn't get the win yesterday. So if this loses, then I'm negative for the week. And if it wins, I'm positive for the week. A little bit unfortunate that it's also Friday, so it's not like I could say, okay, I'll come back tomorrow. So sometimes trades like this might affect your mental, where like that specific day decides whether you're going to be profitable for the week or not. And we have to be okay with saying, okay, last week was a losing week. Next week will be profitable, or it may even be losing as well, because we cannot control the probability of the strategy. I've done enough backtest to tell us that it's profitable, but we cannot control the outcome. So it doesn't matter how profitable it is, we don't know where the losers are, right? And I know you guys might get tired of hearing me talk about psychological stuff, but it's really true. We don't know exactly when the winners and losers are going to happen. So we just have to keep executing trades how they are. I saw a profitable trader who trades, I think Funded Engineer. He lost like 14 trades in a row or something like that. 14 or 16 trades in a row. And the dude is making like 25 to 50,000 a month. And he's able to accept 14 to 16 losers in a row, by the way. It's not like he was winning some, losing some. No, he lost 14 in a row. And then he made like 50 something thousand. Then he lost 25,000. So it's like a really up and down roller coaster. So I think if traders that are making 6 figures, 5 figures are able to accept such high numbers of losses, I think we can accept 2 losses in a week. That's just my opinion. Right now we're just waiting to see what happens. I do believe price could reverse here and keep going higher, but overall it could also just keep going lower because New York looks like it was the OTE of earlier today. It moved up to like the 60 something fib retracement or even the 80, and now it's going lower. So it could go ahead and keep going lower, or we could get this nice retracement up. We're still waiting. Yeah. But nobody wants to hear it, right? Everybody just wants a winning strategy. But even with an 80% winning strategy, you're still going to lose 20% of the time. And it's not like you're going to win 8, then lose 2, then win 8, then lose 2. You may lose 2, win 2, lose another 2, then win 8 or 10, then lose another 2, then lose another 2, and that will affect your mindset when you're losing like that. So all I can really suggest is just taking the trades how they, like, how they appear. Like no breaking the rules, no thinking about what's gonna happen. Just execute the trades exactly as they come every single time. Every single time. So on Monday, regardless if I lose or win this trade, on Monday I'm gonna execute the same way as I did today. Tuesday I'm gonna do the same thing. Wednesday I'm gonna do the same thing until I see 25 trades. If I see 25 trades, guys, and I haven't won more than I've lost in 25 trades, I don't care how many funded challenges I blow. Okay? If I see in 20 trades that I've lost more than I've won and I'm not profitable, then I'm gonna think, okay, this is probably not working anymore. Okay? So, I don't like this here. You see this right here? Big long wick rejection after some big red candles. This could be grabbing liquidity here for it to go lower, and we may get stopped out. Or it could keep going up. Anyway, let's go back on the 5-minute. The reason why I keep switching to higher time frame, guys, is because once we enter the trade, we don't need to see this, okay? We don't need to see this right here. All this doing is affecting your mentality, thinking like, okay, I'm gonna get stopped out. I'm gonna get stopped out. Well, if you're gonna get stopped out, accept it. You know, just accept it. Whatever. So this trade hasn't hit 4R yet. It's close to 4R, right? So you would have lost one over here and then won this one, which is a decent thing, like losing one, winning one, or even losing two, because you're losing 0.5 but you're making 2%. The only reason why I like the gold drilling entry is because you know you're going to lose or win really quickly. Like right now we're sitting through this trade here, but for the gold drilling, you're going to know in probably 1 or 2 minutes if you win this trade. Right? So that's the main difference. So let's go back on the 15-minute and we'll see how it plays out on the 15-minute here. This 15-minute candle just started, right? So this could go all the way up here. It could go all the way up or end around here because it already made the bottom wick. So I don't expect this to be going down any further. If this is going to reverse and keep going higher, it's not going to come down here anymore. Okay, so I do believe, did it hit TP? Yeah, so the gold drilling just hit TP right here. It hit the 4R right there on that candle. And now it's continuing higher. Let's see, maybe once we get 1R, we move to break. Actually, once it reaches here, I'll probably move to break even. Okay? That way the trade is risk free. So once it gets to 1.2R, and then I'll stop the stream, because regardless of what happens, then it's a free trade, right? If it gets up here. What's it look like on the 15 minutes? So far, so good. So when you enter a trade and you also switch to a higher time frame, you see how much more relaxing it is, because you don't have to see those down candles every few minutes or every minute or every 5 minutes. You could just switch to 15-minute and just watch it, monitor here, because then it's either in drawdown or it's in profit. You don't have to watch it keep going up and down, up and down. Reality is we would like this trade to win, but that is not the case. It may not be the case that this trade wins. At 10 o'clock there is news, so hopefully the news will drive it in our direction, right? Because we do have news at 10. Oh, this is not good. Now, from a 15-minute perspective here, this is the only time I would say maybe if you wanted to close at break even, you could possibly do this. Because if it does come down here, it's probably going to keep going lower. Because it's made such a big wick on the upside that if it does want to come down, so if you're positive for the week, you could always just exit break even here and lose nothing, if that's going to affect your psychology. Now, if you don't care about losing or winning, then it's fine. You could just keep the trade running. See, I've seen this type of play happen way too often. I'm pretty sure it's going to keep selling now for a little bit. So gold drilling hit 4R, while gold slinger, or not gold slinger, why did I say gold slinger? Gold miner has not hit 2R yet. It barely, I don't even think it hit 1R, right? It almost hit 1R. We do have news at 10, so in 20 minutes we do have news. And that news could, you know, possibly drive it down or drive it up. I'm still holding because I'm ready to accept. If I lose this, I'm ready to accept the loss. Alright. Let's see. We have about 20 minutes. I might keep the stream running, honestly, all the way because it is Friday, so I don't mind holding this out and seeing what news does. If you got somewhere to be, then, you know, it's in profit right now. So you could always take profit, or maybe take 1R when it hits 1R. Or hold it to 2R and just after 1R, maybe when it gets like right here to the blue line right here, move your stop loss to break even. Then close out your screen, or don't close it, but, you know, stop looking at it. Let's take a look at what the 30 minutes is doing. 30 minutes is trying to create an engulfing candle. But like I said, it could just flip and keep going down. On the hourly, we're still red on the hourly. We're still bearish. And on the 4 hourly, this just started an hour ago. We have a bottom wick. I strongly believe this will go up. So, waiting for news to see what happens. But I really think we could have our trade coming at news. We could see a good move. Hopefully. Let's see how this 15-minute closes. Okay. We see the 15 minutes slowly going down, which means the next 15 minute, if this ends bearish, guys, we have to be aware that the next 15 minute could keep going lower. So we're hoping that this finishes bullish and strong bullish, because we know that if price is something like this here, look what happens the next candle. It goes up a little bit, but then continues driving down. Same like right here. You see what happened here? It had bullish, but it closed back into the range of the previous candle, and then the next candle dropped. Same thing here. Next candles dropped. So hopefully it finishes strong bullish. But right now I'm not really paying attention to it anymore, because as long as it doesn't reach up here, I'm not doing anything. Once it reaches up here, I'm moving stop loss to break even. Once it reaches this blue line over here. Okay? Okay, so now it wants to go here. So this is what I'm going to do. I'm going to almost there. It's also reached 1 hour by now, so if you wanted, you could move stop loss to break even here. Because the rules say once price reaches 1 hour, we move stop loss to break even. And maybe that would be the play for you if you're too busy or you cannot wait this out. Moving stop loss or break even will give you a better chance at, you'll have less emotions on this. What I may do is move stop loss a little bit in. And if we go on the minute chart really quick, okay? It's not looking too bad. Like, the minute chart does not look bad at all. It's still looking like it wants to push higher. It's still pushing higher. And right around this blue dotted line is where we are going to move stop loss to break even. It wants to do it. 3, 2, 1. Let's see what the next minute candle does. Okay, so I'm probably going to move it here because it's reaching these highs right here. I'm going to move my stop loss to break even now. Modify order. And alright, so now it should be risk free. Okay. $1,956. Okay. Alright, my stop loss is at break even now. I hope you guys have also done the same thing. and moving stop loss on this one to break even as well. Okay. Pretty simple now. Now the trade is risk-free. And all we did was pay attention to detail. And we could go back on the 15-minute. We don't have to look at that 1-minute chart. We could be just looking here. But actually, I do want to go to the 1-minute. And I want to talk about the gold drilling entry. So you had the first entry here, right? This one lost, right? It stopped you out here. And then it had some imbalances here, but they were all within this bigger imbalance, right? So we didn't take any of these. And it had the next entry it had was down here. And as you could see, it came down, it almost stopped you out, but it didn't. And in fact, if I just move it right here, you will notice that this trade here was a full R and it hit it right on this candle here. So you would have made 2% here, right? You lost not 1%, but 0.5. So you made 1.5, and I believe we were up 3% on the week. So if you're up 3% on the week and then you win 1.5, you're up 4.5%, okay? With the gold drilling entries. So it may be something you look for on another challenge account, okay? I'm not saying take this instead of the gold miner. I'm saying take this as well, which means you have 2 sets of entries now. On 2, you could use 2 different accounts for the entries, okay? Because some days where we didn't get the gold miner entry, we still got the gold drilling entry. Keep that in mind. Now here price is trading almost close to TP. You could decide to exit full TP here if you do not want to wait till news, because news could end up reversing this really bad, okay? So you could go ahead and exit the trade here. There's no shame in that. Or move your TP to 1R, okay? Because we could see price reverse back down before news and you could be hit break even. So exiting around, maybe moving stop loss to, if you move your stop loss to 1R down here, you may be saved. It may hit you out, but you still made 1R on the day, okay? Keep that in mind, that this could be a good option if you choose for it to be. 2R is getting close. Maybe if we get one more heavy push up, I'm gonna exit here. So let's see what the 15-minute is doing. If we could get a heavy push on a 15-minute or a 5-minute, okay, this is good. Let's see what this candle does. It could reverse and continue higher. Now, I'm probably looking to exit soon, okay? Okay, so I'm gonna exit here with this big push up right here. I'm exiting my position. Okay, exited. And yeah. So we are done. That was the trade. Exited slightly below. Well, it was probably like around here, so like a 1.8. Okay. That was my trade, guys. Anyway, before I close the stream off, let me go ahead and review. So I got out like right around here. Okay, let's go ahead and review today, and then I'll close off the stream. As you can see, price is still going up, and it's gonna hit 2R. It hit 2R now. So I exited right just before, and now it's hit 2R. So really good day today. Good job if you got that and you ended up staying in the trade. But let me review what happened, and then I'll exit the stream. Just want to make sure you guys learned something. So we knew our day was going to be bullish way before we even started trading, okay? And on a 5-minute, we looked at the first 5-minute low. So this right here was not the first 5-minute swing, because this candle was 8 a.m. So the last swing before 8 was this one right here, okay? If we go down to the minute chart, once price broke that, we took the trade on the first engulfing candle we saw, which is this one right here, right? There's no engulfing after it broke and closed below here. There is no engulfing candles here, right? Except for this one right here. Okay? Once that happened, we saw price come down a little bit, and then shot up, came down again, shot up, came down again, shot up, and hit TP. Slightly 2R was right here, and now it's reversing a little bit, but the gold drilling, it had a loss right in here, and then it had another entry that won 4R here. So that's both those trades. Did you win your trade, Michael? But that's the trade for today. I hope you guys learned something there, but you know, even if it lost, we would have had the same kind of reaction. I don't really... Oh, that's good. I'm glad you won. We always have to accept the losers. I did exit a little bit early, so I didn't even make 2R. I made like 1.8, maybe a little bit higher, but I exited like around here. So I didn't make quite the full 2R. And that's something I have to work on for holding trades. I do panic sometimes when trades come up towards TP. I do exit a little bit earlier, especially since we had so many candles like this. I thought, you know, it may stall around TP and then reverse, because if you look on the left, you have all this imbalance, right? It could reverse at any point. It doesn't have to hit our TP. So that's why I exited a little bit early here. But yeah, alright. So guys, I'm gonna see you on Monday. I hope you learned something. Talk to you guys later. Have a rest of a good day, and have a good weekend. Alright, bye bye.